This is my update on the state of the economy and with everything that's happened over the past week and my predictions going forward about the mortgage industry and interest rate. We know that the Feds were planning on doing a 50 basis point increase on interest rates. They're meeting on March 22nd, and we were expecting them to increase short-term interest rates by a half of a percent or 50 basis points. Well, last week, Silicon Valley Bank collapsed, and so did some other banks as well. And now this has us wondering, are the Feds going to continue to be as aggressive on their rate increase strategy? And could they instead pivot and decide to only increase interest rates by 25 basis points or by 0 basis points? So that's one thing that we're wondering about. Another news is that the inflation report, the CPI index, which is one of the main measuring tools for inflation, came out yesterday, and inflation in February cooled like expected. So that's really good news. We're to see inflation come back after the month before the data wasn't quite as good. So positive things on the inflationary side. The Feds are watching the economy and the banking industry extremely closely, and they have to be very careful on the decisions they make going forward, not to send this economy in a downward spiral. So I think that there's reason to believe that they could pivot and not increase interest rates. And here's my prediction is that if they pivot, they only increase by 25 basis points or even 0 basis points, it could cause mortgage rates to start to drop. And so here's the thing, spread this word, and that if they're looking for a great mortgage banker to help them based on their goals and their strategies, do a 3-way group text, introduce them to me that way. It's a great way to warm hand off your best clients. My goal is to always give a world-class experience and to build so much value for you and them. So have a great rest of your day.